Okay, good afternoon, everybody, depending on where you are. Hope everyone had a wonderful, wonderful Christmas and happy holidays and all of that as we are in another short week of trading. Just making sure everyone can see my screen so we can kind of go through the trades. You saw that I put in the trade inputs earlier today. I listed several trades that I've already made today, closed some winners, closed some losers, and just going through and just doing everything that you need to do today. And this is exactly, I want to take you through exactly what I do on a daily basis. So I open up my monitor tab in Thinkorswim to see how everything is doing and how everything's going. And you can see we're down 40 bucks for the day after having a very, very good week last week, up 2.18%. And now it's a matter of filtering my trades by profit and loss percentage. So you can see the biggest losers in the portfolio, and you can also see the winners in the portfolio. So what I normally do is go through on a daily basis and I will close those positions that are at 50% or more profit. And remember, we've been experimenting some with Tasty Trade in a options jive session that they did on the 21st of December. If you haven't seen that, check it out. Options jive on December 21st, 2020, about if a position goes against you by 50%, then you have less than a 50% chance of that position coming back to be a winner. So in the past, we had looked at things and said, hey, let's wait to close things if it becomes a 2x loser. Based on that research, it was really compelling to me that perhaps we need to look at things and start closing them at a 50% loss because the odds are no longer in our favor that that trade will eventually become profitable. So as I look here, the XLE position, it looks like I have a strangle on in this position that is at 51.9% profit. So I would go create closing order. Remember, I'm greedy. I like to work the order a little bit. So if we're closing a trade, then we're going to be paying a debit to do that. The mid price is 38 and that is 39. Let's send it at 38 and see if we get filled and take our profits. All right, so we've got that order working. Then we have SPX. This is I've not posted this trade yet, but this is a 0 DTE trade that I've got going on, just a single contract. Nothing else is at a 50% winner. So we'll let this XLE position work for a second. So let's go to the losers and see what we've got on there. Recall the ES position says it's a 97% loser. I fully expect that to be a 100% loser. But as I told you before, this is part of a black swan hedge where I actually sold options to purchase options. And the total cost of these long puts, and I think I've got 25 of those on. Yeah, I've got 25 long puts, was financed by the sale of short puts. So while that shows a loss, that's not really a loss because those were paid for in full. XLK is down 86%, 79 bucks on that trade. Let's see what we have in there. We're just short a call in XLK. You know, it's at 87% loss. We said we were going to start managing things at a 50% loss perhaps, but I still want to let that one go a little bit. How many more days do we have in that one? We've got 18 days in that trade. So I'm going to leave that one alone. Chewy, why did I short Chewy? It's down 83%. I just got an in-out spread on that, but it's up $31 on the day. So I'm still going to, I feel comfortable with that. IWM, I've got an in-out spread on that one as well. It's only down 26 bucks. I'm going to leave that one. The VIX trade is something that I want to go over with you guys. This is part of a hedge that I have in the account. I want to show you how to put this on. This was introduced to us from Kirk at Option Alpha. And it's basically where you take 0.025% of your entire account and you buy a 10 Delta VIX call every 30 days. So we expect that one to actually lose unless the market were to tank and volatility goes up. The Apple trade, I'm short a put spread in there. It's down 57%. Should I manage that? I don't think. Well, no, actually, I've got a strangle on an Apple. I'm going to leave that one on. I'm not going to go with the 50% on that and close it. And so natural gas down 40 bucks, 6.5%. So as far as my daily adjustments in my account, I've got everything working on that. Let's take that one order on XLE. Let's bump it up a little bit. I'd like to go ahead and claim my profits in that. Let's move that up to the net price of 39. Confirm and send. And let's see if we get out of that one now. There we go. We're filled and out of XLE. So that's the first step. You open your account and you say, what can I close? What do I need to manage? What am I worried about? And you're ready to go. Now, what is the second step that we're going to do on this account? We're going to go to the spreadsheet and we're going to enter the net lick for the day. And the last time we entered a net lick was 44,395.28. So we're going to go in and today, hold on a second. And this is something you're going to do every day. So what did we do for today? Is 12/28/20, almost New Year's. The net lick on the account as compared to Friday is, hold on, I got to pull it up on my phone because I've got my account number hidden from you guys, but I don't want to hide the amount that's in the account. I want you to see that. I don't know why people hide their account numbers. I don't know if people think that someone could go in there and do something to it or not, but okay, 44,421.13 is the actual amount in the account. So let's go 44,426.38 as it changes by the second. And then what we go to in the spreadsheet is we go into the Greeks and ratios to see where we're at. And you're going to enter your Greeks for the account. So what is my SPY weighted deltas in the account? We go back and can everyone see my screen? Just making sure. Oh, we got some other, okay. Matt's coming in. Making sure we got everyone in there. Good. No one else in the waiting room. Great. So the next thing that we do is we're going to go in and put in our deltas. So our deltas now are 8.79. So we're positive deltas, and that has to do with the fact that I've got a SPX short put spread in for the day. So that's making that positive. What did I say that was again? My delta for the day is, now it's 11. It changes moment by moment, but you capture it what you can. 13.93 is my SPY weighted delta. So we'll put that in, 13.93. And that will calculate your SPX delta. Then you put in your theta. So we like to have theta. And the theta on the account is 56.75, let's say. 56.75. Then, what is your Vega? We're always going to have negative Vega because we sell options. Negative 329.23. Negative 329.23. And then it comes up with a couple of these ratios. We'll talk more about those later, but those aren't the main things that we want to talk about. The two major things we want to talk about is our delta and our theta. How much buying power are we using in the account? We're using 21,202, let's say 21,202. All right, so that's everything we need to do as far as, Matt, did I not let you into the room? You're in there now? Okay, you can see the screen. Great, everyone's in. All right, so let's see where we're at. It tells us that we're positive deltas. We normally like to be a little bit negative deltas, and you'll see why on those days when the market actually goes down. When that happens, that you want to be slightly negative deltas. Our theta, we're collecting $56.75 per day in the account in theta. And the major thing you want to look at is this here number. You see it lit up a nice green. That means we're doing something totally right. I want this number to be between 0.1%, so 0.10, to no higher than 1%. Are we within that threshold? Yeah, we're above 0.10. We're at actually 0.13. So the spreadsheet is telling you that your theta is in a really, really good place, okay? We've sold options, we're collecting theta, we're really, really good. The second thing we look at is this delta, and the spreadsheet will actually tell you if you need to make an adjustment. Now, we've got a couple of adjusting things here that tells you which one to go by. O and P are the ones that if you are going by tasty trade and having 1/2 of your negative deltas to 1/2 of your negative vegas, then you would need to sell 178 deltas to be short enough in this account. But I've not been really looking at this one, at the tasty trade one, as much. I've been doing this one. So I would recommend to you, choose one. Go with this one or go with the yellow one, and I'm going with the yellow one. And this is telling you how much of an adjustment you need to make in your deltas. Well, it says no adjustment, which basically means that my account is delta neutral, and I'm fine with that. Now, although it says no adjustment, we know that the deltas are 13.93, and we would like to have a few negative deltas in the account. Any questions on that at all? So this is what you do every day. Should I adjust trades? Which one should I adjust? Then you go to the spreadsheet, you enter your net lick, you change up your Greeks and ratios, and then you're going to make sure how much premium you should be selling per day. And it's really just a process that you go through on a daily basis to make sure that you're putting all the trades that you need into a day to make sure that you're collecting the premium that you need to collect. But what I wanted to cover for you today, before we start selling options, I want to go over the VIX Hedge today. You also have a tab that is titled VIX Hedge. I've got instructions for you there telling you everything to do, but basically it calculates your current net lick of your account, and it automatically calculates the percentage, the dollar amount that you should put into purchasing VIX calls. Okay, so it tells me that I need to allocate $111 toward my hedge. And this is an important concept if you're selling options. And most of the time we're selling puts in a lot of different underlyings. We may be doing that in the micro E-minis or in the E-minis or SPY. You're selling puts and you're most worried about the market crashing. What happens if we have a sudden crash? So I've been testing and been pleasantly surprised by the back test of a hedging method that Kurt Duplantis introduced at Option Alpha. Basically, you go out 120 days to expiration, you buy 10 Delta VIX calls with 0.25. Everyone's there. Okay, I may have lost you for a second. I apologize. Okay, everyone's still there. Okay? So, what do? And when you put in your current net lick, it should automatically pull it in for you. It'll tell you the amount that you should allocate to the VIX hedge. So let's go into the options chain. And I'm going to show you me actually putting on the trade. And remember, we want to go out to the one that is about 120 days out in VIX. You can see, theoretically, technically, I should have, oh, you're not seeing my screen now. Hold on. Someone's not seeing my screen. Share screen. Thanks for letting me know. How's that? Now you should be seeing it. Great. Let me pull chat back up. So, as you can see, I've got VIX calls in the 22 days to expiration cycle, the 50 days to expiration cycle, and the 78 days to expiration cycle. Theoretically, I should have placed a trade at about 120 DTE. I'm a little late on that, but one of the reasons is I wanted the VIX to go down a bit. And you can see VIX is a little bit down today. It's down 0.36. And remember, I've got $111 that I need to allocate to this trade in buying roughly 10 delta calls. Well, as you see here, if you're going by delta or probability in the money, they're totally different, aren't they? You see probability of in the money, this is 9.25%. If I bought that, it would cost me $230. So I'm going to go actually use the particular delta, as Kurt says, so around in this area, and buy about $111 worth of calls. So if I were to go here and buy this one, on buying the calls, that would definitely be 2 calls at $111.44. Cool, right? I mean, it gets me right at the amount that I need. Or another thing that you could do is say, well, rather than that, I could actually go and buy this one, the 18 delta, if I wanted to be closer to the money, and do 1 contract, save on commissions, and that would be $110.85. What am I going to do? I'll tell you what I'm going to do. I'm going to go and actually do this one that is a bit closer to the money. Okay? So I'm going to buy this one for $110. It's not showing the working order. Let's go back. Well, it says I failed to deliver my order. Okay, hold on a second. Now, let's try it again. Let's go here. $110. We'll confirm and send again. Go there. Now let's see if we get filled. Boom. So I've got my VIX position in. I want to take you to the Analyze position a little bit. Not sure how many of you use the Analyze tab on Thinkorswim, but it is a fabulous, fabulous tool. And I just want to put in VIX here so that it sees who's got a phone in here or whatever. Emma, turn that down, baby. Dad's on his call. But I wanted to show you this. This is a cool little thing that will show you what happens if, okay, great, check this out. What happens if VIX increases? Look over to the left, and you have these numbers. Let's see, how can I show you that with my pen? If I can find my pen. Great. Let me open Epic Pen.
Can you share your screen?
Yes. Okay, you're not seeing the screen again? Great. Thanks for letting me know. Can you see it now?
Yes.
We can see it now.
Great. So here's what happens, guys. Watch what happens. This is the price of VIX now. And if over here, it's interesting to see. This is what happens at various levels of volatility if the VIX goes up. So while we have this, is watch what happens as VIX increases and goes to 26, 27, 28, 29, 30. How much money are you making on that position? So if VIX goes up to 50, go back to the left and look at the very left of the screen. Do you see that? If it's the 113% level says that the VIX position would be up $3,700. If it is up even more to a potential of $4,300. So this is why we put this in. And the higher VIX goes, so if you get into the 60, 61 level, look at those numbers on the left. So you're going to make a profit on those positions of $6,500 to $7,200. So this is a really, really, really effective hedge that we use to put in for those of us that are selling options, and in particular selling put options. Okay? Any questions on that at all? It's something that I back tested through 2006, and actually the trade has a overall positive expectancy. So although now you're seeing that I'm down on that position, where is my VIX position? There it is. The VIX position, I'm down $188, almost $189. Overall, that has been a positive expected trade from 2006 through the end of October, of 2020. So it's a really, really effective way to protect your account from downside. And you do this every 30 days. So if you are placing in your account, if you're doing 0.0025% of a $100,000 account, then you would allocate $250 to it each month. Okay? So your maximum drawdown, if it doesn't work, if you just throw that money in the air as insurance, is 3% of your account. Okay? Because that's getting 0.0025 times doing that 12 times a year each month. That's 3% of your account. Am I willing to risk 3% of my account value in order to protect it? Yes. Yes, I am. I anticipate having large enough return over the course of the next 52 weeks, the next year, that I think that 3% in order to have a very good amount of protection is a worthwhile investment. Any questions on that? So if you are out there and you've got a much smaller account, I want you to complete your spreadsheet. I want you to go through. Some of you have asked, Bobby, what I do? Just delete the stuff that you've already got into the test spreadsheet? Yeah, delete those numbers and put in your numbers. The only thing that you shouldn't delete is any of the formulas that are in there, but start tracking your trades and start with the VIX Hedge. And I think the VIX Hedge is a great way for you to start hedging before we actually go into the process of selling our premium. And what we're going to do toward the end of the day is we're going to put in a trade, depending on your account size, or not even depending on your account size. We're going to do it in the micro E-minis. I like putting these trades in at about 15 minutes to go in the market before the market regular trading hours closes. So around 3:45 Eastern time, I'm going to go in and I'm going to actually put in my trade that will be expiring on Wednesday. Now, these are shorter term trades, but it's a great, great trade that has been back tested. I will actually post the links where this strategy has been back tested. But what we're going to do is we're going to go in toward the end of the day. We're going to sell a put on the micro E-minis, and we're going to do that at a level that will bring in a little bit of premium with a great probability of success for the options that will actually expire on Wednesday. So let's just open the options chain and let's see what that looks like. And make sure, guys, that you go to your broker. If you're not approved for options on futures and futures, get those permissions. Jolly, where are you at? You're in here, right? Can you turn on your Matt? Turn on your and
Yes.
tell everybody what you found out from your broker about futures and futures options.
TD Ameritrade requires a minimum balance of 1,500 in a regular account or 25,000 in an IRA account in order to trade futures options. I think you have to be a level 2 options trader and have a margin account, and then you have to apply for the upgraded features, or you can just call them and tell them you want to, and they'll apply it to your account. But it takes maybe 2 or 3 days for that to go into effect.
Okay. So 2 or 3 days for that to go into effect. That's what you found out with TD Ameritrade. So that's wonderful. So guys, I would recommend getting those permissions if you at all can, because a lot of the trades that we do now, we'll do some stock trades that you guys can do. But let's just look at a potential trade. Now, I said we'd do it for the Wednesday expiration. The micros do not have a Wednesday expiration, so it looks like this expiration is in 3 days, right? Because it's a short week in the market. But what we're looking at is putting on a high probability trade, maybe at the 5 or 10 delta. Let's see what that 10 delta would net us in premium. There you go. It's a 10 delta. It's also a 10% probability of being in the money. You sell it for $2.90. How much money can you bring in on that? Now, guys, the multipliers on the micros are very small, so you'll see that you would bring in premium of only $13. Is that worth it? No, I would not sell an option for $13. And that's one of the problems with the micros, is that they're very, very low. But you may have to go out to something maybe like a 20 delta. Still a high probability of success, collecting $6, but even on that, it's a 28.53 credit. Not a lot. Now, let's talk about the buying power on this. If you did a 20 delta, you would take a buying power reduction of $1,065. Okay? And you're only bringing in a credit of 28.53. Does that make sense? Maybe not. So maybe a better thing to do on the micros, because I normally do this on the E-minis. So let's look at something that would be out 53 days to expiration. And again, if you're opening your spreadsheet, you go to the actions page, it tells me on this particular account, hey, Bobby, you need to adjust your buying power. You need to close positions. Why? Well, I know exactly why, because it is saying that my buying power is too much. I'm using 47% of my buying power based on the implied volatility, or what the VIX level is. It says if you're at a VIX of between 20 and 30, you should be using a 35% max buying power. I'm using 47. So it's telling me, hey, Bobby, you really don't need to sell anything because your theta is in line, your delta is in line. Remember, it said no adjustments. So you really don't have to sell anything. A lot of times I'll go against the grain and will still continue to do that. And one of the reasons is because I've got a couple grand of buying power tied up in that SPX 0 DTE trade. So that will come off at the end of the day. So I feel good about putting on a trade. So we saw that the credit in the micros is not that much for the 3 DTE. So let's see, go back to the spreadsheet. Okay, the reason it says that I won't be selling premium today is because I need to close positions. So technically, I should listen, right? I should listen to what it's telling me. But if we were going to go in today, we would go to the 53 DTE, and it's the number that is closest to 60 days without going over. We would go in, and this little thing will tell you on the micros tab. All you got to do is type in MES, and it will tell you, check this out, what the IV percentage is, and it will tell you the recommended delta that you should sell. So IV is at 21%, and this is based on what I pull in from Thinkorswim. It's different, maybe different from what you're pulling in from Tastyworks, and it says, hey, Bobby, sell a 15 delta. So let's go out to 53 days. Let's find a 15 delta. You see, I've already got a position there that was probably sold at the 15 delta. That's already at a 10 delta, or a 10% probability success. So let's go to 15. Now, you can either go by delta, which would get you closer here, or you can go by probability of in the money. I like to be a little bit safer, but let's see what we could sell that for. $25.75. And the mid price is $26. I'm a little greedy, but I'm going to actually just see how much we could bring in on that trade. So you could bring in a credit of $128.53. Now, if I didn't want to do any other analysis on any other stocks, I could simply go here and pull out the amount of credit that I need to sell for the day. For example, in the action tab, now it says day complete. Well, that's because I haven't entered anything yet. But it says in this particular account, hey, numbskull, it's Monday. You need to sell $344 worth of premium. I could go into the analysis that you guys and I have done over the last few days. We could search the Tasty Trade watch list. We could see what is down, or we could simply make our decisions in the micros all by themselves. So if I need to bring in $344, then maybe I need to move that to 3. There you go. I would be bringing in a credit of $385.59. My day is done. So most of you have told me, hey, Bobby, I work a full-time job. It's hard for me. How do I do this? Guys, I've traded years and years with a full-time job. You do it with this. I do it with my phone. I download the Thinkorswim, the mobile app. I make my trade here. You go to the bathroom, right? You go on your cigarette break. If you're a fat person like me, you go on your Twinkie break. And you get along and you've got your thing here and you say, okay. And you can actually pull up your spreadsheet on your phone too. So you can have Excel. I've got Excel on my phone where I can, keep my spreadsheet saved here to OneDrive, which is a Microsoft product that'll keep that in the cloud for you. Or you can upload the spreadsheet to Google Sheets. You can open that. So you can see, hey, or before you leave in the morning, enter in your Netlick, enter in your Greeks, and the spreadsheet does a wonderful, wonderful job of telling you, hey, how much premium do you have to sell today? And then you only have to make one trade to do it. So this is a $44,000 account. I got to sell $344 a day in premium. It says I'm over allocated right now, but if you were to ignore that and wanted to get your 344, go to the E-mini, the micros, and get your premium sold. Now, I'm selling a naked option here. Some of you have never sold a naked option and you're scared to death. What do I do? Oh my God, Bobby, that just sounds terrifying. Well, remember, the first time you do this, it is. The first time I sold a strangle, I was literally trembling. But let's look at how much buying power that takes. Looking at my screen again, selling one of those If you only needed to collect $128 in your account, you sell one of those, that has a buying power reduction of $554. I don't know if you remember, but Tasty Trade in the month of December had a wonderful, or maybe in November, a wonderful market measure that said, hey, Bobby, well, it didn't say, hey, Bobby, it said, hey, goofy traders out there, what is the probability that your maximum loss would go greater than the buying power required to make the trade? Y'all, it was very, very low. I think it was less than 1%. So if you're looking at this and you go, oh my gosh, it's a naked put, how much loss am I potentially making myself, going into in this trade? Chances are it is very much capped at $554. Can it go more than that? It absolutely can. Will we manage the trade before that? We absolutely will. But this gives you a wonderful opportunity to sell your premium without doing any kind of analysis at all on any other stock. Just sell them in the E-minis. And you've got that hedge in place that will help you. Hi, Bobby. Dimitri says, where can I get the trading spreadsheet? Dimitri, if you'll go to sweetbobby.com, I uploaded the latest version of it. Let's see if we can go there. And I'll show you exactly where it's at. This is the easiest place to get it. Sweetbobby.com. Sweetbobby.com pulls up, and you'll see right up here at the very, very top, Sweet Bobby spreadsheet. And it will pull it up right here. Sweet Bobby's complete spreadsheet updated yesterday, 12/27. You just download that and you can open the spreadsheet. Okay? So, what have I given you today? I've shown you what we're going to do every day. We're going to open up the monitor tab in Thinkorswim, or if you're using Tastyworks or whatever broker you're using, we're going to go see what our great, wonderful children are doing, the ones that are over 50% profit. We're going to close those. Then we're going to see what the problem children are. And do you still have the same assumption on those trades when you put them on? Are you managing those at a 2x loss? So if you brought in $1, you close it at $3. So if you brought in $100 worth of credit, you would close that when it's at a $300 loss. Or are you going to, as I've been experimenting with, use Tasty Trade's latest research that says if you get to a 50% loss in a trade, then the chances of that trade recovering are less than 25%. Because our entire game is this: we sell premium with the odds in our favor, correct? Then we manage the risk and we rinse and repeat day in, day out, day in, day out. And if you've never sold a naked option, you never sold a strangle, the first time you do it, you're going to be a little bit nervous. And you're going to want to say, well, Bobby, should I do a spread? You could do a spread. You could go into the E-minis, you could do a spread, you could widen that out, 5 points, 10 points, 20 points to cap your risk. But what you're simultaneously doing at the same time is you are putting the odds not quite as much in your favor as if you had sold the naked position. The odds of your success on that trade actually go down. And until you actually experiment with that, it's hard to explain, because most people come into this business and they go, oh my gosh, the iron condor is the greatest trade known to man. Oh man, all I'm going to do for the rest of my life, I'm going to sell iron condors. And you make money on a couple of those, and the next thing you know, it doesn't work. And you're flipping out and freaking out going, why didn't it work? Well, a lot of times it's because of the defined risk component of the iron condor. Whereas if you had done strangles instead, you would have been much more profitable, and the odds of success would have been more heavily in your favor. So what we've done today is very, very important. I want you to go back. I want you to review this video a few times. What do? You open the monitor tab. How am I down? What am I up? What are my problem children? And you get everybody in line, You can sort here by your winners, your losers, and you see I'm down 303 on the day. But actually, from the time that I entered my net lick on the last trading day, we're actually up a little bit. And I've closed problem children. I've closed the good children who have made me 50%. Look at this. I'm almost ready to close ZB. What is ZB? That's the futures on the bonds. Okay? So we've got a $171 profit there. Made $62 today. It's going to be hard not to pull that off. Look at this one. In my E-minis, micros, the micros that we're just talking about. What have I got on? I've got a few of those positions on out 32 days, 53 days, and that entire trade, because the market is up today, is up $81. Are any of those at 50%? Well, yeah, there she is. The open on that one is $72.50. I made $18 on that one today. So there are things that I need to close, aren't they? So let's try to close that one. 1050. Boom, chicka boom. You're taking off risk. Boom, I'm out of that trade. Now let's go back. I didn't notice that one a while ago. You guys must have made me nervous knowing that you're here today. So we see that we've got another one that's at 56%. I've made 19 bucks on that today. It's up 68%. It's up 51.12%. Boom, chaka boom, baby. Let's close that puppy. Close it at 11. Bam. Out of here. People say, oh man, you can't trade the micros. They're not liquid enough. Do you see they're liquid enough? I'm closing every one of them, right? Let's see what that leaves me. So that leaves me with a micro that's up 39% with 53 days to go. One is at 32 days to go that's up 35%. Let's let those little babies mellow a bit. Now my theta is down to 45.24. You go back to your spreadsheet. You go to your Greeks and ratios. What was it, 45.24? Let's put in my theta again. So theta's gone down. Am I still where I need to be? 45.24, I think. It says, Bobby, you're at 0.10. I'm still green, baby. That I'm still within being at 0.1% to 1%. Still no adjustment on my, here, I really need to change that, I guess. Let's see, what's our new delta after I did that? Oh, now I'm negative delta. How cool is that? I told you I wanted to be a little bit negative deltas, right? Well, by closing some of those puts that I had on an up day, then we're able to now go, okay, negative 10.06. Let's put that in there for my deltas. Negative 10.06. 0.06. There. So that's still good. I'm still above in my buying power because buying power says if the VIX is between 20 and 30, use 35% max. I'm using 47, so I'm being a little bit aggressive. No adjustment on my deltas. You go to the action page. Do I need to adjust my buying power? Yeah, by closing positions. Well, that's what I've done, right? I've closed several positions. Did it take my buying power down any? Let's see what buying power we're using now. We're using 2279. Let's see if that made a difference at all in our buying power. Yeah, a little bit. We were at 21,202, so now it was what, 20, what was it? My memory. 2272, let's say. 2272. We go over. No adjustments necessary. We're still good to go. Questions, comments. How do you adjust the trade when it's negative? Okay, in other words, if a trade goes against us, well, there's a couple ways you can do it. You can, one of the things Tastyworks and some of the guys at Tastyworks, I think Beef and some of those fellas would close their trades if it reached a 2x loss. So if I bring in $1, I'm going to close it when it gets to $3 because I get to keep the dollar, but then I've got a $3 loss, which nets to a $2 loss, or twice the credit that I brought in. Based on the options jive from December the 21st, I really want you to watch that one. on Tasty Trade. It basically showed if a position goes against you by 50% or more, then the odds of that trade coming back to our favor and becoming profitable are less than 50%. I don't like those odds. You and I should not be taking odds of less than 50%. We want something that's 67% or greater, right? When we're doing the odds of something. So I'm experimenting with closing losers that go against me by 50%. And oftentimes you can, here's the great thing too. Some of you guys are working, right? You're at work and you're like, how do I do this, Bobby? How do I monitor all this stuff? Guys, you can put in a closing trade on futures or on these positions to close it at a 50% profit. And your spreadsheet even tells you what price to put in. Let's open the micros tab. Let's go to this one that we put in. Check this out. It will tell you what the 50% profit guide is. So you sold it for $29.75. Put a closing order in to close it at $14.75, $14.80, $14.88. Go ahead and put those orders in. And there's nothing cooler that you waking up in the middle of the night or you waking up in the morning and you see some of your orders for profit have ding, ding, ding and filled. Now, in stocks, equities, things of that nature, you can also put in a one cancels other order so that you can close it when it reaches your max loss as well. Now, with Thinkorswim, you can't do that on futures options, and it drives me crazy. I can't put in stop loss orders on my futures positions. So I do have to watch those a little more carefully, but at the same time, let's look at the screen here. If it gets to a 2x loss, that tells you that when this thing reaches a price of $89.25, you're at a 2x loss. Close it. So you can place and we'll talk about this at a later time also, you can put in a alert within Thinkorswim to tell you or to ding your phone or to send you a message that, hey, it's reached a 2x loss so that you can manually go in and cancel your trade. There are ways, guys, that you can do this and work a full-time job. I'm not going to watch the screen all day. I'm just not. I don't put in stop loss orders. I rarely use a stop loss, but I may receive a notification or an alert that it's at a 2x loss, but I'll just open it a few times a day. I open the application here, and you can easily change these, PL open, PL day, PL year to date, and you can see PL percentage right there on the phone, PL percentage. And it tells me what percent all of my trades are. So I'm just kind of looking at that during the day a couple of times to make those adjustments. Okay? So you've got a $1,000 account. I can't do this. No, you can do this. You can do this in a limited way. You can use the macros. You can do trades that are heavily in your favor. You can do spreads in some stocks. Don't let that stop you. You know, depending on what your brokers, you know, Jolly already told us, Matt told us today about what the requirements are for Thinkorswim, but check with your broker. You go somewhere where you can actually be able to put on these trades in a way that are putting the odds in your favor. And we're going to limit our losses and we're going to hedge. I've showed you a VIX hedge today. That's something that I'm really ecstatic about. It works very, very well. Also, we're going to be doing a black swan hedge, something that I'll show you when we get a big day down. When we get a big day down, we're going to sell some puts to start another hedge that's a little more complicated than the VIX hedge. But by using that hedge in February and March, my portfolio was up 208%. I mean, how can you do any better than that? I was sitting there in my podiatrist's office as he was checking up on my toe that he cut off, you know, saying, hey, doc, you ain't going to believe this, but we are up a lot of money in this account, and I got to start closing. And he was excited too. You know, I was sitting there on the phone, doing it on the phone. So if you can do it at a podiatrist appointment, if you can do it at your job when you're in the potty or in the bathroom, you can do this anywhere. Any questions at all? I think this has been a great, great session. We're going to do this tomorrow. We're going to go on. We're going to come on. We're going to do the same thing. If you're working, can't make it, we'll record the session, post it for later. But there's no reason you guys can't do this and be successful in selling options. So thank you so very much. I'll post this in just a little bit, and thank you for joining us. I'll be in the room the rest of the day. You've got questions, let me know. Oh, don't forget, tomorrow night at 7 p.m. Eastern Time, we've got our class. It'll be recorded if you can't make it, but we'll go on Zoom tomorrow after the market closes, 7 p.m. Eastern, and we're going to teach you how to start drawing those levels of overbought, oversold that I've been showing you. So it's a really, really good session tomorrow night, and I look forward to seeing y'all tomorrow. I hope you have a blessed day.